Welcome back to my weekly QQQ trade series. For anyone new here, I'm Patricia Saylor, managing partner of Saylor Financial Fundamentals. Today, QQQ is trading at about $528 a share, and I have a covered call with a strike price of $501 expiring in the money today, while my $501 cash secured put is ready to expire worthless. I considered accepting assignment on the covered call to lock in some gains, but I decided to take a very different approach, which earns me a meager $79, but sets me up for a potential additional $300 in future capital gains. Let me show you how I do it. With QQQ trading at about $528 to $529 a share today, I am short a covered call with a strike price of $501, which is expiring today. I've been thinking about what to do with this position, and I was tempted to take assignment on it, but I am going to kind of go with my gut this week. QQQ has been running so hot that my gut tells me it's bound to have a pullback in the next month or two. So instead of taking assignment and reestablishing the position with higher strike prices, I'm just going to roll this call out and up as much as I can for a net credit, and then I'm going to start selling weekly cash secured puts at the same strike price. Since everything is in the money, I think this is a fairly low risk, low reward way to manage this position while I give myself a little bit of time to see how things play out over the next month, but I'll still be able to generate some income. So I'm going to start by rolling this position out 28 days. If I keep the same strike price of $501, I can bring in probably $286, but I'd like to raise the strike price because I plan to sell my cash secured puts with the same strike price, so a slightly higher strike will give me more income for the puts. I'm going to try to raise it to $504 and bring in at least $50. That would give me a potential $300 in capital gains, but if I can't get that to execute, then I'll drop it to $503 and then set up the cash secured put. Okay, I got it to fill at $50, so that'll be a $48.68 credit in the account. And now it is time to sell a new cash secured put. For the put, I'm only going to go out 1 week, and I'm going to sell it with the same strike price that I have for the covered call. That way, if this put is assigned, then I'll already have a covered call in place that would basically wheel it out at the same strike price. Now I'm coming over here to write instructions for myself about how I will manage this trade. And let's do a quick summation of where things stand. The net liquidating value of the position as it stands today. And now my total expense and income to date. The sum of those gives me my profit and loss since starting this campaign back in May of 2024. Let's see, May 16th, 2024. And I'm really glad that I have been adding shares to this position because they are growing in value. But right now, with the share price where it is, I just don't feel like I want to add any more shares right now until I see what the price is going to do. So my plan next week is to roll the cash secured put out another week, and I hope I'll bring in more than $30 next week. But this is not a bad outcome today. I increased the strike price of the covered call by $300 and brought in $78, almost $79. So not too shabby, especially because I'm just feeling cautious about the position right now. So I will see you next week when I'll be adjusting this position and making my monthly trade adjustment on SCHD.